The Reserve Bank of India is expected to hike its key interest rate, the repo rate, by 0.25% later today. Now, according to a Reuters survey, the repo rate is the interest that banks pay to borrow from the central bank. So an increase in that rate makes banks raise their lending charges. If those expectations come true, then that would mark the 6th consecutive rate hike. In all, the RBI has raised the benchmark rate by 2.25% since May last year. Post the February hike, India's central bank is focused to pause on interest rates, showed by the survey. Those expectations are largely driven by projections for economic growth to slow this year amid a bleak global demand outlook. Still, similar to other major central banks, the RBI is waiting for stubbornly high inflation to ease further before they move away from an aggressive approach. What is not helping is the reason for global inflation surge over the past year, the disruptions to global supply chains because of the Russia-Ukraine war. The war on the edge of Europe shows no signs of abating, and instead the standoff now seems to be escalating further. That will keep central banks on their toes. The RBI has repeatedly warned a cautious approach is needed as the current rise in price pressures is supply-driven, which has been India's bane for decades. RBI Governor Shaktikanta Das is expected to repeat that the central bank remains flexible in its approach to dealing with the price situation. However, in a respite for the RBI, India's budget showed the government focus is on lowering the fiscal gap rather than increasing spending, which could have pushed inflation higher. The challenge for India's central bank going ahead this year will be twofold: a slowing economy and still elevated inflation. How the RBI navigates both those risks will determine the economy's path this year amid a gloomy global backdrop. WION is now available in your country. Download the app now and get all the news on the move.